Hey everyone, how's it going? Welcome back to this week weekly trade recap videos. This week I have a bunch of trades to go over, but it's a very good profitable week. So let's go over the trades that I took and what's my management behind them and take it from there. So first trade is a Aussie yen. So let's take a look at Aussie yen pair. We able to catch this bearish run to the downside, and there was some profit that was made here. So let's take a look at my entry here. So we know that on the higher time frame that at the time we're seeing this as a double top formation, and on the lower time frame I mentioned like this ascending channel pushing the price up. And if we look closely here, we have this kind of an impulse, reversal impulse, and then an ascending channel correcting the price right back to this double top, a reason double top, higher time frame double top, ascending channel, and then we have this impulse up and then a reversal impulse down. And that's why when I was looking at this trade here, I looked closely to see that there was a reversal structure, reversal correction here, and then the first impulse down followed the first correction, which is how I got in, and just had a pretty decent stop loss 25 pip above this correction, and just let the stop entry order took me in. So price pretty much just impulse down and then triggers me down, and eventually was going to break out of the higher time frame structure. And what I didn't like and how I managed to close the trade was I see this impulse down at the time, and I had a quickly reversal impulse followed by like a continuation correction. I still have a strong belief that we could just see a deeper correction before the next down move, but I just didn't want to hold through a deeper correction that may or may not correct all the way up here. I didn't want to lose about 3.5% or so. So I just exit here when the price broke down. And naturally, price kind of just formed a deeper correction here and then eventually still dropping down massively. But I'm very pleased with my result, pleased with the management. We cannot predict the future. All I can see was there was an impulse down, reversal impulse, and then there's a lower time frame continuation. And just like my management, I didn't want to hold through a deeper pullback and end up taking on more profit. So that's the first trade, Aussie yen, for about 3.4%. So let's look at the second trade, or two trades I took on pound yen. So let's look at pound yen here. I talk about pound yen from the top here that we could be getting a kind of a bearish reversal from the price. And pretty much we did have that bearish reversal kind of price action pushing down, and there was some profit to be made in that area. So we know from a higher time frame that we broke a kind of a top. We broke this previous top, and price continued to go up, but it continued to go up very correctively. This is why we see ascending channel. If we look closely here, we have a double top here. We have a M style pattern, and on the M style pattern on the right, we have that ascending channel. So all these are very good bearish kind of price action, bearish kind of reversal price action. So I was looking to look for entry here. So I saw this ascending channel pushing the price up. I saw this head and shoulder pattern as well, and we break out of this ascending channel, and I was looking for a potential entry. And price did a very quick pullback, kind of a wedge, but it's a continuation correction on the lower time frame to correct this move. So I just set an entry order here. 50 pip stop loss just above the previous high, and price kind of consolidated during the first few hours or so, and then had that sharp move to the downside and kind of quick pullback and then continue down a little bit more. Again, same trade like Aussie yen I just went over. We had a short push to the downside and a really quick impulse up followed by a correction. And I didn't want to hold through a deeper correction to lose our profit. So I just exit here, same trade, similar exit like Aussie yen I just went over, and for about 2.3%. And naturally, after price finished correcting, when I see this correction forming, when I just zoom out a little bit here, this just becomes a quick impulse, right? We see this impulse down, and I was looking for a continuation correction, and I was looking for a entry right back in because I knew that we would see a little bit more continuation, and I want to capture at least the next bearish run a little bit to the downside. And this is kind of how I entered the second trade on pound yen. Enter as a reversal order, one of my entry that I look for when I see a potential correction almost finish, and I was looking to have the price tag me in. So just set an entry order below this couple out 1 hour candle here, and I put my stop loss above this correction in case the correction needs to correct a little bit longer. But price just tagged me in and then just pretty much quickly dropped down massively and then pull back and then continue to drop. My management at the time was I wanted to let the price a little bit more room this time because there was a little bit more confirmation than the first trade, because this is still from the top, but we have a clear impulse down followed by a correction. So I was waiting to see this next impulse. Was it going to follow by another correction to continue to the low, which is going to be my target? But price pretty much start pulling back here. And at the time when I start seeing this, I should have moved my management. I should have moved my stop loss probably to the white line here, to this double top to secure probably 1% or so. But I just decided to leave it a little bit more room for the price to correct. As I see this kind of a channel, ascending channel correcting the price, and I really thought this will be the area where the price will continue down lower, but instead it's just kind of dribbling up, and then I just got tagged out because I set my stop loss just above this previous swing high here, so about 1.3%. But when I do my journal, when I look back at the trade, I thought I could have managed a little bit better, probably squeeze a 1% or so, make this a 2.3% profit. But we're not always going to make the best decision based on market condition. At the time when this is pretty corrective, I really thought that we could have seen the next impulse. But if we did not, hey, that's why we manage it accordingly. I took profit still. I still managed to get about 1.3% from this overall move. So I'm still pleased with the overall result. So 2 trades of pound yen resulted to about 3.6%. Let's move on to the third trade, which is NASDAQ. So NASDAQ, I've been talking about potential kind of a sell, potential kind of bearish bias on the indices. I like how we have this kind of impulse, correction impulse, and then kind of a rising wedge to pull back. But what I like about it is when I see this double top here, when I see this kind of a double top and then a small lower time frame head and shoulder, and really strong impulse down to the downside. And I was waiting to see if there's going to be any kind of continuation correction that's going to form on the lower time frame, and that's exactly what happened here on, I think it was Friday. Friday here, I formed a correction here, so I just set an entry order here below the correction. Price tag me in and stay consolidated for a while, pull back, and then push down again. And when Monday morning market open, when I start seeing the push start kind of climbing back or so, I already moved my stop loss to break even once we hit 1-to-1, and eventually prices kind of pull back and then hit me out for a break even and continue to the upside to pull back pretty fiercely. So again, my risk management to set stop loss to break even is always um, my very good decision on these kind of moves, because we don't know if this next move is going to be the one that's going to go down, or we're going to see deeper pullback. We see a deeper pullback here, and looks like we might see another continuation down. But that's why we control our risk by setting it to break even. So that's NASDAQ here for a break even trade. Let's look at S&P 500. Very similar, like NASDAQ went over. I squeezing a little bit profit when price broke up here. So let's take a look at my overall analysis on it. So at the time, I was very similar kind of bias like like NASDAQ here, because I see a higher time frame double top, and I see a ascending channel moving the price correctively. And if we go down to the lower time frame, if you notice, it's that same head and shoulder pattern. We have an impulse, correction, impulse, right? So we impulse out of this ascending channel, so that's a very good sign. And I was looking for continuation correction, which is this little lower time frame continuation. So again, my entry order just below the correction, I had a pretty wide stop loss, about 25 pips or so. You can see price stay kind of in the red during the Friday, and then when New York session opens, it really dropped to the downside and had a really quick pullback, and then closed the market around here. And when Monday market opens, similar like NASDAQ, I see this correction pulling back. And when price forms here, and then when it breaks this previous high, this is when NASDAQ was hitting about break even as well. So I just manually decided to close the trade down for a little bit profit here, because I really don't see how how the trade will continue down now when I see NASDAQ already pull back pretty hard. So I just decided to manually exit the trade here for about 0.3% or so, and eventually you can see price just pull back and hitting my stop loss if I didn't do that. So it's either when I manage it accordingly to set the stop loss at break even, or I just take a little bit tiny profit when I no longer see the bearish kind of price action to continue. Okay, so that's S&P 500, so about 0.3% profit. Let's look at silver. Silver is another trade that I took this week that I was looking at it to be a pretty good bearish continuation. So we talk about that overall condition of the price, and price is forming this double top here, and then we have this impulse, correction, impulse, followed by a continuation correction, and I was looking for continuation down to the previous low. Okay, and that was a very decent short-term kind of trade. I do see the risk reward in this area, and how I manage it was I was looking for when price to break out, right? So we have that higher time frame structure. We broke out. We followed by a continuation correction, right? So that's where I enter the order. I set my entry order just below the correction, and then price can take me in, and then push down and form another correction, and then push down. This was during, I think, Thursday morning, when we had a pretty good surge to the downside. And when I see that surge to the downside, I already move at least my stop loss to break even, and then I move it to about 1-to-1 or so. But we see this strong reversal impulse up. This is during, I think, Thursday New York session when I was doing a market update. I was at the time I said I wasn't too phased about that pullback when I started seeing a decline from it, but when I start seeing the price forming a continuation correction after this bullish reversal impulse, then that's when I see that this move, this downside move should be no longer valid when I start seeing an impulse followed by a correction. So I just move my stop loss just about above this correction here, and pretty much price push up here and then take me off for about 1.3% profit. And overall, when I look at this trade, I thought the management was very good. I couldn't have exit here because my overall kind of a target was the bottom of this higher time frame structure. So it's about 8 or 9%, or even this first low here for a little bit more profit. So I really wouldn't exit just because it dropped down. And all I can do is manage it accordingly, right? We can never always enter at the highest point and then sell at the lowest point. All we can do is let the price come to us. We enter accordingly, and then if the price decide to change, we'll exit accordingly to be consistent. So that's my silver trade exit here for about 1.3%. Let's look at dollar Singapore dollar. Dollar Singapore dollar is also a trade that I was looking at for potentially seeing a bullish price action. I like the overall price that has been pushing down, and then I see this kind of a reversal structure. We have a few swing highs and few swing lows, and then price had a pretty much an impulse correction, impulse out of this reversal correction, and there's a continuation correction here in the making. So I was looking for kind of any kind of breakout from that continuation correction. So you can see that this was the impulse. We impulse out of that higher time frame reversal structure, and then there's this kind of a pennant continuation correction. Double bottom here, impulse correction, and I was looking for a correction after breakout. And that's when I set my entry order here just above the price. Price stayed consolidated for a little bit before it pushed to the upside, breaking above this high. I didn't really like the consolidation here. It's not the impulsive move that we're usually getting to see, and I want to see price to actually continue pushing out to the top, at least to the top here. And then, but I just didn't get that. I didn't see that, and I didn't see that overall impulse move. So I just manage it the way how I would. I break the previous high already, so I set my stop loss to break even, and price pretty much tagged me out here for a break even trade. Overall, I still like what I'm seeing here. I still like what I'm seeing here on the overall higher time frame and lower time frame. I still reasonably believe that there could be a bullish move to the upside. It's about if the price is ready here, or are we going to form a deeper correction, something like this, and then still take to the upside afterwards. Okay, so I'll still keep an eye on this for the next week or remaining of the month. Last trade I want to talk about is Euro Aussie. So Euro Aussie was a trade similar like Euro Kiwi that I was looking at, and I wanted to see if I can capitalize on this bullish reversal move. So at the time when I was looking at Euro Aussie, I like how we had the descending channel moving the price down. We have an impulse correction, and we impulse out of that correction at the time. So I was looking for a continuation correction to keep going. So took two trades here. I want to go over both of them. So first trade was the better management, better entry. When we see this kind of continuation correction after we break out of those descending channel, and I was looking for a reversal entry order, the way how I would enter these, because for a breakout entry order, I think the stop loss would be too wide. For me, I'm comfortable entering these kind of reversal order. I'm waiting for the price to tag me in. Just set it above this little correction here, a pretty decent stop loss, about 60 pips. And price initially impulse up pretty aggressively. And I was happy to see that. I set my stop loss to break even. And then I just start seeing this sharp push to the downside already. And I didn't like that because I wanted to see continuation. I want to see at least a correction and then continue. But this is just a really sharp reversal kind of impulse as well. Price kind of formed a correction here and push up, but just stay consolidated for a pretty long time. And that's when I see this low here, and I just set my stop loss below this low for about 0.5% or so, and eventually price had this sharp move to the downside and then pretty much tagging me out here for about 0.5% profit. Looking back at this, I'm fine with this management. I'm fine that I didn't take a stop break even. I actually took a 0.5%. You could argue we can move up a little bit, but I didn't want to choke the price. This was the previous low. I want to make sure that I can let the trade run a bit, let the trade consolidate a bit in case it's going to correct a little bit longer before the next up move. And that's the first trade on Euro Aussie for about 0.5%. Second trade I took here for a full loss on Euro Aussie. I do believe that there's a little bit of FOMO in me when I took this second trade, and I want to admit that. After taking a 0.5% profit here, and when I start seeing this lower time frame descending channel, to me, this is still a good, very valid price action. We have few lows now and few swing highs, and that this correction that we're looking at can still be the one that's going to take off to the upside. And I didn't want to miss the opportunity, so a little bit of fear missing out, and I want to admit that because sometimes we're humans and that happens, right? And the way how we manage it afterwards, pretty much how you can be consistent and not consistent. So for me, when I entered this trade, I was looking at this descending channel. I set an entry order breakout, and price pretty much just tagged me in and then just pushed down massively and just tagged me off for a full loss pretty much in 2 or 3 hours. So really fast, quick 1% loss. And right after I took a loss like this, a lot of newcomers or beginners may get emotional and start entering trades again. When I look back right after I took this loss, I knew that there was a little bit of fear missing out in me, and I didn't want to start taking random trades or start getting emotional. And that's when I just pretty much just shut my computer off and then just told myself, okay, well, only have Friday left for this week. I'm just going to chill out. I'm not going to enter back any more trades because I don't want to enter any emotional decisions. And that's how I manage these kind of things when I fall into these fear of missing out, because sometimes we're humans and that happens. But the way how I manage it is, I stay away from the computer for one day, and I'm gonna go to the weekend and come back strong for the remaining of that 1 week left of the March month. So took a loss here, good lesson here, and good thing to write down in my journal so that I don't, or try my best not to make a similar mistake in the future. But that's trading. We're always going to make some sort of mistake, but how we improve from it and how we mitigate from it is how we're going to be more consistent and sustainable in the future. Okay, so these are the few trades that I took for this week. Pretty profitable week so far. So Euro Aussie took 0.5% loss. Dollar Singapore dollar is a break even. Silver is about 1.3%. S&P 500 is 0.3%. NASDAQ, I took a break even. Aussie yen for about 3.4, 3.5%. And pound yen, two trade add up for about 3.6%. So any question, comments, or feedback, please let me know below. And I will chat with you guys next time on Sunday night, Monday morning for my weekly trading outlook. All right. Thank you very much, guys.